Yanko Wango, let's go! Yanko Wango, let's go! Hush!
I want to play it smart.
Yanko Wango, let's go!
A brand new start.
Yanko Wango, let's go! Hush!
I want to fly.
Yanko Wango, let's go.
Give great a try.
Live your best life every day with the Smart Network. Hutch, go smart.
Everyone, welcome.
From industry, we thought we must bring people who can represent a fair amount of economic activity in Sri Lanka, and we thought we'll invite Mr. Dilan Kapitarachi, who's the head of tax for Income Spence Group, and Mr. Amal Padaguda-Heva, who's the head of tax for Carson's Group. So, with that, may I invite Mr. Vijayawardhan to start his presentation, and then thereafter we can get to the panel discussion. The chamber will be centrally controlling, I guess, the cameras and the mics, but as a matter of request, may I ask all of you to switch off your cameras and microphones while the session is going on. Over to you, Mr. Vijayawardhan, for the presentation.
Yes. Good morning to everyone. I think my screen has been shared, so if any problem, you can inform me. I'll commence my presentation, and actually the first slide has already been explained by Mr. Hulangamo, so I'll move to the second slide. There, from that part, from the second slide onwards, I am going to discuss about the amendments available in 2021 in the Revenue Act number 10 of 2021. So first,
Nihal, sorry to interrupt. Nihal, yes. Can you on full screen for the presentation, please?
Yes. Yes, is it okay, Mr. Ulangam?
No, it's still the same, but that's okay. If you can't, then continue. It's all right.
Okay, then I'll start from the exemption. First exemption actually available for banking sector. From that, according to the notice published by the Commissioner General from the date of 1st April 2018, we have announced certain exemptions. So non-resident persons who are receiving interest or discount from sovereign bonds that they are invested, it's exempted according to the Principal Act. But now, with effect from 1st April 2018, even the realization gains also exempted, and it was given for resident persons as well, but only for interest and discount with effect from 1st April 2018 for sovereign bonds and Sri Lanka development bonds. According to the proposals made with effect from 1st April 2018, there's no exemption given for gains on realization of relevant bond, but it was given as a result of the budget proposals made in 2021. So now you can claim interest, discount, and realization gains as well for sovereign bonds. But in order to claim the exemption for realization gains on investment of sovereign bonds, you have to be invested more than $100 million as an aggregate investment to qualify for that exemption. So now I am moving.
Nihal, sorry to interrupt. Nihal, your screen is not moving. You're on agriculture slide. You're talking about banking.
Okay.
Yeah, just
Sorry.
Sorry. Yeah.
Doesn't matter.
Ladies and gentlemen, pardon with us for the slight interruptions because Nihal is speaking to us from Kandy due to the current situation. So people are talking and addressing the audience from 4 corners of the country. So there can be some technical hiccups. So you have to pardon with us for that slight interruption. Sorry about it.
Is it okay now, Mr. Ulangi?
Yeah, now it's okay. I can see the first screen. I'll keep moving from one to the other. Yeah.
Okay, then I'm moving to the agriculture sector exemption. So you know that this exemption granted with effect from 1st April 2019. Therefore, for the year of assessment 2019-20 also, this exemption you can apply, but it's available for agro farming activities. So agro farming activities has been defined in the Act. In our web notice issued in January 2021 also, we have informed what are the activities qualifying for agro farming, but later it was changed in incorporating some of primary processing activities as well. So
Nihal,
you can
get to the slide. Nihal, your slide can't be seen. You're on the first slide yet. You have to go to agriculture slide. Just keep moving down. Just press down and move.
Is it moving?
No, it's not moving. No. Now it's okay. Now you're agriculture slide. Now it's okay.
Can it be seen?
Yeah.
Okay.
Yes. Now you're on agriculture
Okay,
slide. Now it's on agriculture slide. Yes. Yeah.
Okay. From the in accordance with the agriculture exemption, you can see that gains and profit from the sale of agro farming produces are exempted from income tax. Therefore, you can apply this exemption only for the sale of agro farming produces, and you have to find what is the gains and profit in relation to this activity, and then you can apply the exemption. So there are some cases the agriculture farmers are using same producers for their processing or manufacturing activity. In such cases, you can you can claim that exemption based on the deemed sales provided by the Act. And this exemption is available only for 5 years period as informed in the 2021 budget. In order to provide this exemption, agro farming has been defined as I explained. So it covers most of the farming activities, including cultivation in a land and cultivation in a greenhouse and certain animal related activities. So you can see that rearing of fish is available, but deep sea fishing or low sea fishing are not covered. So you have to fish should be rare. If not, you can't claim the exemption. In addition to the farming activities, it was extended for another level, that is only for certain primary processing activities. It includes cleaning, sizing, sorting, grading, cutting, and chilling activities. So if you are preparing your farm agricultural product, so it's available only for the farmer. If the same person is doing that primary processing activity, you can claim that. If you are purchased another person's harvest and then doing the primary activities, then it's not coming under the agriculture exemption. So if you are preparing those items to the market by doing these primary processing activities, then you can claim the exemption. So next, as I explained, there is a concessionary tax rate for companies for agro processing, and for manufacturing activities also a reduced rate has been given at the rate of 18%. Therefore, the Act has provided the meaning of the agro processing activities and manufacturing activities definition also given by the Act under section 195. So agro processing means the processing of any locally produced agricultural, fishing or animal products. So you can't process imported items. Definitely it should be a basic producers farmed in Sri Lanka. And the activities are also given in that. Only few items available there: dehydrating, milling, packaging, and canning for the purpose of changing the form, contour, or physical appearance. So these are the conditions available, but it specifically excluded some deep sea fishing activities and manufacturing activities. So manufacturing also defined to include the change in a non-living physical object or article or thing, and there should be a transformation of such object or article or thing into a new distinct object, article or thing having different name, character or use. So there, when after the transformation, there should be a different name, character or use. And it also includes bringing into a existence of a new and distinct project with different chemical composition. So as I explained, this is the way you have to calculate agriculture sector exemption and agriculture, and this is the way you have to apply the relevant tax rate for agriculture sector. Say the farmer has produced basic agricultural produce, and without any process he is selling, then in the hands of the farmer, it's the gains and profit received from the sale of unprocessed agricultural produce is exempt, and he is allowed to do some primary processing activities as well. So if he has done it, so he can claim that exemption up to that point as well. So if in the case where the farmer is using his basic agricultural produce, so primary process produce for his agro processing activities or for manufacturing activities, agro processing will be the relevant part of the gains will be taxed at 14%. Relevant part of the manufacturing activities will be taxed at 18%. If the same farmer has done these activities with effect from 1st April 2021, in relation to the agro processing and manufacturing quantum that you have used your basic agricultural farming produces, you can entitle for a tax reduction in relation to the such part of profit. It's not available for the items that you have purchased from another farmer. It's available only up to the relevant quantum that you have used out of your farming activities. But it's not available. The tax concessions are not available for the items that you are purchasing from the other farmers. Agro processing will be taxed at normally concession rate of 14%, and manufacturing will be taxed at 18%. So now I am moving to the dividend exemption. There are certain dividend exemption also introduced. These three items actually implemented with effect from 1st April 2020. Dividends to non-residents exempted. Dividend distributed by certain commercial hub enterprises are also exempted. The Act says what are the commercial hub enterprises. So in order to explain the next item, I'll take this example given in this slide. So company A, company A and A, B, C are a group of companies. So we can assume that the B shareholding is available to A.
Nihal,
100%.
sorry, Nihal, to interrupt. Nihal, your screen can't be seen. So may I suggest that we take over from the chamber, we'll take over the presentation slides.
Then, yes.
And then you can, when you want to move the slide, please say next slide, please. Then the chamber will, ladies and gentlemen, I'm very sorry for this inconvenience caused to you. It is largely because of the fact that we're operating from, as I told you, from different parts of the country, and coordination is not easy. So just give us about 2 minutes, Nihal. Chamber Secretary will take over the slide presentation. And
yes,
you can
chamber has
slides to move. Please ask it to move to the next slide. They'll move the next slide.
Okay.
Dylan, I'm sorry, ladies and gentlemen. Just give us 2 minutes. Bear with me for that.
Yes, it has been done. So I'll start my presentation again. In this case, company A declared dividend to company B, that is 1,200, and out of that 1,200, company B has to pay tax on their taxable income by incorporating this dividend income. So including this dividend income. So when declaring that dividend, company can deduct expenses or losses subject to the provisions of Inland Revenue Act. According to my example, company B is having 200 of expenses, so they have deducted 200 of expenses and arrived to the assessable income of 1,000, and the applicable tax rate is 14%. So they have paid 140 amount of tax to the department, and net gain available in the hands of company B is 860. So in the hands of company B, now gains and profit available to distribute to its shareholders is 860. So B can declare that dividend to C. In the hands of C, 860 is exempted. Say for an example, if A is a commercial hub enterprises, in the hands of company B, it's exempted. Now, using that exempted profit, company B can deduct expenses, and thereafter the company B can declare the relevant profit to company C. In that case also, company C can entitle for this exemption. So it says dividend paid by resident company. So in my case, resident company is company B, and its member is company C. So in the hands of company C, it's exempted if the company B declared the same after deducting expenses and taxes. So in the hands of company B, net gain is 860. So I'm moving to the next slide now. Next one is for foreign currency related exemption. According to that, you have to bring the foreign currency to Sri Lanka to qualify for this exemption, and this exemption also granted with effect from 1st January 2020. Gains or profit from foreign sources are exempted. So according to the section 73 of the Inland Revenue Act, it says what are the payments that the sources is available in Sri Lanka, and section 74 says if the source is not available in Sri Lanka, then that source is a foreign source. So in that definition, by using that definition, if anything, any income is having foreign source, you can claim this exemption subject to the foreign currency remittance requirement. So even the dividend paid by a non-resident company also can be considered as a foreign source subject to the foreign currency remittance to the Sri Lanka. The second one is service rendered in or outside Sri Lanka to any person to be utilized outside Sri Lanka. So service can be provided by staying in Sri Lanka or outside Sri Lanka. Anyway, the condition is the service should be utilized outside Sri Lanka. I think this is very common matter for all taxpayers, because this was available in our 2006 Act as well. Then the next exemption I am moving, information technology and enable services as may be prescribed. So the minister has to be prescribed what are the information technology and enable services for this exemption. The gazette will be issued immediately to claim this exemption. Otherwise, you can't accommodate this exemption because without having a proper idea. So before the end of the June, the gazette will be issued. It says what are the information technology and enabled services qualify for this exemption. So next slide. The next one is also for interest income. If you are maintaining a deposit in a bank or financial institution in foreign currency and receive any interest in foreign currency with effect from 1st January 2020, that interest is exempted. Next one is a special type of deposits introduced as gazetted by the Central Bank of Sri Lanka. It calls special deposit account. The reason to have this type of exemption separately because there is a, according to the previous one also, foreign currency deposits are exempted, but special deposits accounts are permitted to open in local currencies as well. Even though you have maintained those special deposit accounts in local currencies, it's exempted if you are generating interest income from those special deposit account. Third one is interest income of welfare societies. It's a budget proposal. Therefore, it's implemented with effect from 1st April 2021. And the meaning of welfare society has been given in the Act. So I'm moving to the next slide now. Yes, the next exemption is also introduced not through the budget proposal or as the government policy of the previous government policies as informed with effect from 1st January 2020. This is a request made by the relevant sector. Accordingly, it was given this exemption with effect from 1st April 2021. It's available for gem and jewelry sector, gold, gem and jewelry sector. In order to receive this exemption, they have to bring the relevant export proceeds to Sri Lanka. It's available only for exporters, export of gems and jewelry, gold, and even if you are doing gem and jewelry, gems cutting or processing businesses, you are also qualifying. And if you are selling gems or jewelry for foreigners in foreign currency, it's covered under specified undertaking. So those things you have to claim as a concession. You have to apply this concession tax rate given for that. Next one. Yes, the next exemption is given for specific specific investment through the Sri Lanka REIT actually. So if you are transferring your land or building to a Sri Lanka real estate investment trust, which was established in Sri Lanka and registered in the Colombo Stock Exchange, the capital or business gain that you are deriving from that transfer is exempted in the hands of the seller. Additionally, it was given another exemption for unit holders of the Sri Lanka REIT. Accordingly, dividends or capital gain, if they are not doing an eligible business, it's a company. So in such case, you are deriving dividend or capital gain from units. So that also exempted. If the REIT is doing eligible business, then you are deriving relevant gains or profit with the same character. In such cases also, capital or business gains deriving from the realization of capital asset by the Sri Lanka REIT is exempted in the hands of relevant unit holder. Moving to the next slide. The next exemption given for vocational education institution to promote the vocational education in Sri Lanka. So if any institution is conducting TVET courses and the institute also has to be registered with the Territory and Vocational Education Commission, and in order to qualify for this exemption, student intake of the year of assessment 2021-22 should be doubled compared to the previous year. Previous year means 2021. So if compared to the 2021, if your student intake has been doubled, then you are eligible for this exemption only for the gains and profit in relation to this TVET courses. And this exemption available for 5 years from 2021. In order to receive this exemption during the 4 years after the first year, you have to maintain the same position that you have doubled the student intake. So in my example, it says 2021 student intake is only 1,000 and it doubled to 2,000 in 21-22. So in this case, it's eligible for this exemption, and 2,000 or more level has been maintained. Therefore, they can claim the exemption for relevant years of assessment according to this rule. So moving to the next slide. So certain tax holidays also introduced with effect from 1st April 2021 based on the budget proposals. There are industries has been specified. If you are if you are doing a business of recycling local construction related materials by establishing a separate site, then the gains and profit in relation to that site is exempted for a period of 10 years. And as I explained, there is a policy intention to promote vocational education. So after completing vocational education by any individual, they can start a new business. So if they have started a new business after completing his TVET course, 5 years tax exemption period granted for them, and local manufacturing activities of boats and ships are also exempted for a period of 7 years. Renewable energy projects with the capacity of generating 100 megawatts. So it may be 100 or more than 100. If you are doing that type of project, you are entitled for 7 years tax exemption. And the last one has been given to promote the concept of communication to the village concept of the government. Accordingly, construction and installation of communication towers and related appliances using local labor and local raw materials are exempted for a period of 5 years, and provision of required technical service also coming under the same exemption. So moving to the next slide. Yes, in addition to the exemption, as I said, dividend is exempted in the hands of non-resident. So there are some non-resident entities doing businesses in Sri Lanka. So at the time that they are remitting their remitted profit, they have to pay 14% of tax on the remitted profit. So now there is an exemption for that part as well. In order to entitle that exemption, they have to retain the total profit, not the small amount. They have to retain the entire top profit in Sri Lanka minimum for a period of 3 years, and there are certain investment criteria has been given. They can use that profit to expand its business or to invest in Colombo Stock Exchange. So in that case, after the 3 years period, they can claim this exemption when they are remitting relevant profit. Moving to the next slide. Now I am discussing about the tax rates applicable for corporate sector. As far as individual as far as individuals are concerned, their tax rates are progressive tax rate. In addition to the progressive tax rate, they are having only 40% tax rate on the liquor and tobacco, betting and gaming businesses. Other than that, they are taxable at normal progressive rates. So companies, if you are a small and medium enterprises as defined in the Act under Section 195, your business income will be taxed at 14%. When granting that concession, it excluded liquor and betting and gaming businesses. So if you are doing liquor and betting and gaming businesses, you have to apply 24% rate or 40% tax rate appropriately according to the nature of your business. Goods export will be taxed at 14%. Specified undertaking, it was defined in Section 195, and there are two items also introduced with this amendment. So including those two items, it will be taxed at 14%. Educational services, promotion of tourism, construction services, healthcare services. So gains and profit from relevant businesses will be taxed at 14%. There is no definition for educational service, construction service, healthcare services. So generally, you have to take the general meaning of those items. And for promotion of tourism, Schedule 1 of the Inland Revenue Act is having a definition, and you can apply that definition when claiming this concession. So moving to the next slide. Then dividend received from a resident company, as I explained, it will be taxed at 14%. The second one, given due to the COVID situation of the country, if any BOI company providing health protective equipment or similar products to Ministry of Health, Department of Health Service and Triforces, it will be taxed at, the relevant gains and profit will be taxed at 14%. Manufacturing businesses will be taxed at 18%. So if any person is having lower rate compared to the manufacturing business, like say at the time you are manufacturing relevant product, if you are exporting, you can apply the export rate likewise. So 18% is the applicable tax rate. And betting and gaming businesses and manufacturing and sale or import and sale of liquor or tobacco products will be taxed at 40%. All the other items will be taxed at 24%. So moving to the next slide. These two items introduced with effect from 1st April 2021. It was given for individuals as well. So in addition to the rates as I explained for individual, these two rates given as maximum rates, it's available for gems and jewelry. So consideration received in respect of gems and jewelry, and you have to compute the relevant gains and profit in relation to the sale of gem and jewelry, and that will be taxed at the rate of 14%. And it's the new concession rate also introduced at the committee stage of the Act. It's available for renewable energy sources. So if you are generating electricity and by using renewable energy sources and you are supplying same electricity to the electricity board, it will be taxed at 14%. The next concession rate is available for the companies who are who are going to register with the Colombo Stock Exchange. I mean initial registration within the calendar year of 2021, from 1st January 2021 to 31st December 2021. If any company newly registered with the Colombo Stock Exchange, they are given 50% tax reduction during the year of assessment 21-22, and for balance period 21 balance 3 years period, they are having 14% tax rate. So their total taxable income will be taxed at 24%. So I have given the relevant years of assessment as well. So moving to the next slide. The next one I have already explained, the 50% tax reduction available for new companies registering with the Colombo Stock Exchange. So the next tax rate reduction is available for multinational companies. So if multinational company doing any export during the year of assessment 21, 22 or thereafter, in order to promote their export, this concession has been granted. If they increase their export turnover compared to the previous year by 30%, if they're having any dividend income, they can have a 25% of tax rate reduction for dividend income. So the normal tax rate is 14%. Therefore, 21-22 dividend income will be taxed at 10.5%. And for balance 2 years, the relevant tax rate reduction will be 50%. So the applicable tax rate on dividend income will be 7%. Moving to the next one. So I'm going to discuss about some amendments made to the deduction rules. According to the Principal Act, there is a definition for entertainment. Accordingly, food and beverages also covered under entertainment, but now it was removed, inserting only liquor expenses. So food and beverages expenses you can claim subject to the provisions of Inland Revenue Act. I mean, subject to section 10 and 11. If you have incurred these expenses for the purpose of business, you can claim. If it is not specifically disallowable other than under entertainment. The next one is also introduced to remove some practical difficulties faced by the taxpayers, because according to the section 14 of the main act, it's very difficult to apply the restriction given in that. So it was removed by removing the relevant restriction for repair expenditure. Actually, it's very difficult to split repair and improvement expenditure separately. Anyway, in order to facilitate that, Act has given interpretation for improvement. So it removed repair expenses. So if any repair expenses, whether the repair is in capital or revenue nature, you can claim. And if there's any improvement, you have to apply the restriction available in the Act. So restriction is for building 5% and other related assets 20%. So balance disallowable amount for improvement you can add to the depreciation basis and claim the capital allowance. Research and development given in section 15 of the Act, and it was double deduction rule introduced under the 6th schedule of the Act. So it was expired on 2021. It's available only for 3 years period, and from this amendment it's extended for another 2 years subject to the same rules. And the next one is also temporary concession given under 6th schedule of the Act. So enhanced capital allowance has been granted for certain investment which is less than $3 million. So that concession also extended for another 3 years by way of amendment of this Act. And in order to promote the local milk processing industry, in accelerated capital allowances has been granted, and for milking machines you can claim capital allowances at the rate of 50%, or it's granted within 2 years. Moving to the next slide. The next one is special deduction rule introduced by this amendment to promote the local marketing and advertising service suppliers. So according to the previous context, if you have incurred any marketing or advertising expenses, it's deductible subject to the section 11. So if there's any capital nature expenditure, you can't claim under section 11. So it was removed from this amendment. So now it's introduced as a new deduction rule and define what is the meaning of marketing and communication expenditure in the Act. Basically, all the activities should be carried out by a local person or local institution, and those advertisement can be displayed on television or published in radio, published in printed materials. So if those conditions are satisfied, whether the expenditure is in capital or revenue nature, you can claim. Additionally, it was given a double deduction rule under the 6th schedule of the Inland Revenue Act with certain conditions. So the 15A will be available openly without any change, but this deduction, additional deduction of the double deduction provided through the 6th schedule is available only for 3 years period from the year of assessment 21-22. In order to qualify for this double deduction rule, the relevant product or the relevant goods or services that you are promoting should have 65% of local value addition minimum 65% of local value addition, and certain other criteria is also given, and you can't pay you can't pay the relevant payment for associated person, and there are some document maintenance requirement as well, and there is an upper cap of 500 million only for additional deduction. Say if you have incurred 300 million of Marcom expenditure, then you can deduct 600 million. Say if you have incurred 600 million amount of Marcom expenditure, you can claim only 600 million plus 500 million additional deduction. So balance 100 million you have to disallow and you can't carry forward. Moving to the next slide. Marcom I have explained, so next one. The next one is also a simplification of existing rules available in section 18, that is finance cost deduction rule. So there the difference between manufacturing and service providers have been removed. So you know this deduction rules applicable only for companies who are having share capital and other than banks or financial institutions. They can claim using this new formula. Only the change made by removing the discrepancy between manufacturing and service provider. Additionally, it was clarified the matter stating total of the issued share capital and reserves of the company should be taken using the figures available at the last balance sheet date. So at the end of year balance, you have to taken for this calculation, and as a COVID measure, this restriction is not applicable for any company for the year of assessment 21-22. Only for 1 year of assessment this concession has been granted. So if you have incurred any interest as a deduction, you can deduct it subject to the section 11 and 12 without applying the restriction available in section 18. And if you have brought forward any amount which was disallowed in previous years, that amount you have to carry it forward to 2022-23 and apply the same restriction without counting the relevant year for 6 years period. The next concession is granted for small and medium enterprises. According to the rules of section 19, you can't deduct lower rate losses from higher rate profits. So in the case where the small and medium enterprises are generating turnover more than 500 million, there is a chance that they can't they can't claim the previous year losses. So in order to facilitate them to expand their businesses and to avoid some tax avoidance practices, it was facilitated them to deduct lower rate losses against higher rate profit when they increase their turnover. Moving to the next slide. Next one. So the next exemption, next I am at this stage, I am moving to the new qualifying payments. Certain qualifying payments also introduced through this new amendment. Accordingly, in order to promote the banks and financial sector, merger and acquisition process is there. So it's not a new practice. It's available in previous years also under 2006 Act. If any banks or financial institution acquiring another financial institution, the acquisition cost will be treated as a qualifying payment. Total qualifying payment you have to divide by 3 and installment wise for each year of assessment you can deduct. If there's any amount which is not deductible due to the having low assessable income compared to the 1/3 of qualifying payment, you can carry it forward to 4th year and then claim in 4th year and thereafter and up to the total qualifying payment. So the second new qualifying payment is granted for granted to promote the filming sector as available in 2006 Act. It was introduced to deduct as a qualifying payment if you are producing a film including promotion expenditure. The cost should not be less than 5 million rupees. And if you are a person who is having a cinema or going to construct a cinema, there also it's given qualifying payment. So relevant qualifying payment can be deducted subject to the restriction, that is 1/3 of taxable income. And if there's any amount which is not deducted in the current year, you can carry forward to next year and claim it. Moving to the next one. So the next I am going to discuss some of other amendments. According to the amendment made to the section 126, if you are taking any advice or taking any assistance from any tax consultant or any person other than from including approved accountant for a payment, the relevant person should certify separately up to which extent he has involved in the preparation of return, and he should provide a certificate to the taxpayer, and that certificate should be attached with the return of income. So this amendment will be implemented with effect from 1st April 2021. Therefore, you have to obtain that certificate and should be attached with the return of income that you are going to provide for year of assessment 2021 as well. The next one is for administration review. They are actually originally the time available to review the administrative dispute, I mean for assessment and for other decisions of the Commissioner General. Time available was only three months. Now it's increased. The Commissioner General may review his assessment or other decision within 6-month period, and within next month he will issue his decision with reason, and after 7 months or within 1 month after the receipt of his decision, you can go to the Tax Appeal Commission. Additionally, it was change refund procedure. So in order to claim the refunds, actually should be finalized by the Commissioner General within 6 months, and if it is not provided within the 6 months when the taxpayer claim it, interest will be paid by the Commissioner General. Moving to the next slide.
Nihal, yeah, 5 minutes more.
Okay. The next one is also a concession. Actually, if you are now the applicable rate structure has been given in the Act, so accordingly there is no predominant basis provided by the main Act. Each part of gains and profit will be taxed using the relevant tax rate. So if any person use particular depreciable asset to produce different gains and profit, you are entitled to split the consideration and cost or the assessable charges to apply the relevant tax rate for relevant assessable charge as well. So in order to claim the doubtful debts for banks and financial institutions, record keeping requirements are being introduced. So it will be published in a gazette. And capital gain tax return. So according to the main Act, capital gain you have to submit different so much of capital gains according to the number of capital gain transaction within the year. But now it reduced only for one return, covering all the transaction within the month. And e-filing is compulsory for every resident and non-resident companies and public corporations. So this provision is also implemented with effect from 1st April 2021. Therefore, you have to submit your tax return through e-filing if you are a company resident in Sri Lanka or non-resident Sri Lanka or a public corporation. Definitely, it's mandatory. You have to submit your return of income for the year of assessment 2021 through e-filing only. Others can submit manual returns. Moving to the next one. So it's that's the first one I have explained. Second one is now you are having different gains and profit which will be taxed at different rate, and certain number of exemptions are also given. So therefore, in order to identify the relevant gains and profit, you have to prepare financial statement from the year of assessment 21-22. So separate financial statements should be maintained, not books of accounts. Only the financial statements you have to maintain to identify the relevant gains and profit. Moving to the next one. Okay, those are the things that I have to discuss. Thank you very much to listening.
Thank you, Nihal, for that excellent presentation covering the very important aspects of the amendments to the Inland Revenue Act. I know you wanted to cover all the areas more than this, but unfortunately the time does not permit. But that was an excellent presentation, Nihal, very precisely explained very lot of clarity. So thank you very much for that presentation. And also, I'm sorry for the technical hiccup that we had to meet because of the distance which we are doing this. So, ladies and gentlemen, with that presentation, I will, before I get to any, we have received some questions in the chat box. But before I could get to that, I want to invite the panel also to share their views. So the panel, only the panel may switch on the cameras and not the participants. So may I first request Shamila to share some of the views that she has, some of the concerns that she has, or some issue that she thinks of relevance to the audience that she wants to raise. Maybe make about 5 minutes, Shamila, and just sort of start the discussion, and thereafter I'll get to both Dilani and Amal.
Thanks, Duminder. I'll make it quite quick. So as Nihal did take us through, a lot of the changes were incentives that were provided. We saw incentives provided through the form of tax exemptions, the concessionary rate being applied to a large number of sectors, the qualifying payments that were allowed were expanded. Then the withdrawal of withholding taxes, and of course, in the latter part of his presentation, an expansion of deductible tax expenses. So that was the thrust. I think the thrust of tax proposals, the amendments, was to give relief. Now, on this release, as Nihal did mention, they are retrospective. So some of the agriculture exemption comes in from April of 2019, and the others from January of 2020. So what we also require, as he said, we need certain clarifications and guidelines to be issued by the IRD fast, so that we can implement proposals. I know ITP, of course, will be issued during this month. But certain other clarifications that are required, if it issued fast, then we as practitioners can amend returns that have already been submitted and file them. Another area I want to bring out is that there were certain changes that were done which were not budget proposals and which were not announcements also in press statements, with retrospective effect going back to April of 2018. Now, in principle, I think retrospective tax law is bad, but in the circumstances when certain incentives were given, notices were published, then of course you're aware of those changes, though the law may not be there. But it shouldn't hit you as a surprise, in reading an amending act, because these have consequences to transactions, to business. So I don't think that that is a positive from the tax side, where you suddenly find that you may have concluded a transaction and now the tax law has changed with retrospective effect. And I think we should not know what has happened, we'll say has happened, but it should not be continued into the future, because I understand that even in the current amendments, there are gaps. Now, if you take the exemption or the concession given to SMEs, I think there is a little bit of doubt as to who an SME is. So now these changes, I understand and I believe that the revenue and the policymaker can change it, but those changes must be done prospectively. So it should not be a retrospective change, because in tax law, it's a fiscal law. No one knows the thinking behind policy. So you go on the wording of the law. So any change should be prospective. And the last point I want to raise is the introduction to Section 38 of a deemed assessed value. So that is on the realization of investment assets. You are to consider it on the market value or an assessed value, so a value given by a valuer. But if the commissioner is of the view that that is not reflective of market value, then he can determine an alternate value. So I think that gives room for arbitrary valuations and a lot of dispute to be there. And in this, with disregard to this section, there is no penal code also, because the law empowers the determined value to be accepted as the assessed value. So that might, that will of course infringe on the taxpayers' rights. So these are broadly some of the areas that I wanted to touch on.
So Shamila, now before I go to the next person, you touched on this SME. There are some questions that are come in the chat box also. You said that there are some doubts as to whether what an SME is and how they can get the lesser rate. If you can just elaborate what you meant by that for the benefit of the audience, with some questions on the SME has already come out in that context. So I thought I'll raise it to you whilst it is talking.
Okay, as Duminda, if you look at the bill, I think the intention of that amendment to the SME definition was to give that relief for any group. So that is the company or any company belonging to a group, if the aggregate turnover is less than 500 million. Because there was a thinking that just because you belong to a group, you may be a small group, it's unfair to not give that relief. So then there was the policy, I think the thinking behind it was that it would be extended to groups which have an aggregate turnover of less than 500 million. Now from the bill to the act, I don't know what happened, but now it is, if you read the law, it's as though if the company or any one of the entities have turnover of less than 500 million, then it would be an SME. So there is no requirement to aggregate turnover. So you might find that there are groups which has 400, 100, 200 in aggregate cross 500, but as a standalone, they're below the 500. So in terms of the law, they fall into the definition of SME. So I think the revenue has indicated that that is not the intention, but the issue is now we are already implementing it. So you use the rate, then you have a retrospective amendment coming in. So I think you can amend it, but that amendment should be prospective. Not only to this, I think there is also other sections where the wording is not very correct. So yes, but those changes must be prospective or through a press notice, etc., where the general public know that there is going to be such a change.
So thank you, Shamila. Thanks a lot for that comment. That is very useful. So may I now turn to the industry? We have both Dilani and Amal representing industry from the perspective of some of the issues that you're facing. May I first invite Dilani Kapitarachi, who heads the tax division at Aiken Spence and Vice President, to comment on some of the issues that they are facing, both favorable and unfavorable, Dilani. Right.
Yes.
And can you share some of your thoughts with the audience for about 5 minutes? Dilani?
Yes, thank you, Dhaminda. Few things that I think we are really happy about is certain exemptions that were introduced that is going to be a benefit to the industries, and agriculture being exempt, processing being at 14%, there is a bit of a confusion that is there on what is processing and what is agriculture. On the negative sides, like Shamila said, I think when the press release was issued by the department, certain interpretations that the corporates took in filing the return for 2019-20 and even completing the accounts for 2020-21, we realize has been is different to what has been enacted to the law. One area that is a serious concern for companies would be this dividend pass-through, which is a concern because initially when the press notice was issued, what they basically said was that a dividend received from another company, as long as the dividend tax is paid by the recipient company and it flows through another level, like Mr. Vijayawardena explained, would be exempt in the hands of the shareholder. But when the law was enacted, now they have brought in another requirement that it would be net of tax and net of expenses. So for any corporate, there are lots of corporates which pay interim dividends. So the question is, how would an interim dividend be paid if you have to wait till the end of a financial year until your tax is computed, and the dividend component that goes to the recipient would depend on your tax position? Then I think there is another question that arises from that. What if there is an assessment raised where the Inland Revenue does not agree with the expenses that are deducted against the dividend and the tax liability? Whereas the dividend warrant, when a company gives a dividend warrant, it needs to specifically say if the dividend is taxable in the hands of the shareholder or if it's liable. So I think we had quite a simple system where a dividend passes through the company which is declaring the dividend withholds a 14% tax. The recipient basically takes it as exempt and it passes through the might be many layers in an organizational structure. So, Duminda, I think that is a serious concern. And the fact that we have this enacted law almost after 1.5 years, and most corporates have declared dividends, given dividend warrants, is putting a lot of corporates into quite a lot of strain. So I think if at all, it has to be with not retrospective, it has to be prospective. But at the same time, is there a mechanism even for the Inland Revenue to monitor this is a question. Because if it's a listed company, it can pass through so many levels in an organization. So I think that is something I think we need to consider at the next, hopefully at the next budget. And one other area that we realized is export of services. Earlier, export of goods and services both were at 14%. And we welcome the change of making export of services exempt. But there is a criteria that is brought in which says it has to be utilized outside the country. But where there is export of services, where there could be a utilization, part of a utilization in Sri Lanka, you find that type of companies being subject to tax at 24%, although the company gets the funds in foreign currency. So I think that is a lacuna, or it's a lacuna in the law, because I don't think the intention was ever to make companies which are providing services to offshore, but the consumption can be in Sri Lanka to a tax rate of 24%. Actually, that is a clarification which we would need, Duminda, to see exactly, because even in the Act, there is no definition for foreign source. What they're saying is a foreign source is anything other than what is the local source. So then if it becomes quite confusing how to define what is a foreign source when there is no definition for a foreign source, because the local source is also in length, basically covering everything possible. So that I think we might need Mr. Wijewardena to explain.
So I think you have brought 3 or 4 very pertinent issues the industry will face with enactment. But of course, always some things come in our favor, some things don't come in our favor. I mean, that's how the law is drafted. So you have to take both as it comes. But I understand the issue on dividend. I'm sure Nihal will be able to explain to that to us. But of course, the earlier law was a withholding system, which are very simple. So Nihal is only not the policy maker, so I don't know he'll be able to explain policy to us, but at least I'm sympathizing with him. They have a draft law called policy. So they're probably, maybe Nihal can explain that, Dilani, what the 2 questions you have asked. They're very broad questions and very good, in my view, touching more sectors of the economy. So I'll come back to for Nihal to explain and answer some of the questions that you raised. But prior to that, may I turn to Amal? And Amal probably might have the same issues. Amal, can you please come in and give your bit as to what your views are and the practical problems that you think you're facing? Amal, you're on mute.
Good morning, everyone. Good morning, Duminda. So in addition to this, Dilani's, we want this pass-through dividend. So specific area we need to look at, actually, as Shamila said, this is applicable retrospectively, 1st January 2020. Now, actually, we came to know this, all this and bill and everything thereafter. So the period actually passed, we followed that all the instruction given to the Inland Revenue paper notification. I think that Nihal also will accept that we follow that paper notification direction. So anyway, now as a taxpayers, we are not in situation to correct that component, right? So they strictly follow the circular issued by the departments, and now the law is different than to that. Since that, I think in land review, you have to look at that, very carefully and need to give kind of a solution, because the already distributed dividend, the dividend warrants, etc. Now we can't change, since that taxpayer who receive the dividend will use the dividend warrant issued by the companies. So this would be a big issue if in department is not recognized the practical issue here. That's number one. Second thing, Govinda, actually, I actually understood there's amnesty for the SMEs. I haven't seen in that in the Nihal's presentation. So I would like to raise this question on the benefit and sake of the benefit of the SMEs. So if there is amnesty, I would like to know that Nihal views on that, whether taxpayer need to in writing request for this amnesty, or whether department itself they will do this adjustment in the revenue system. So I would like to get the view from Mr. Vijayawardhan on that as well.
Yeah. Okay, Amal, thank you. But there is no amnesty in the Inland Revenue Act this time. It will come through some other statute. It was there in the budget proposal, but there is no amendment and granting of amnesty in the IR Act. Nihal, so thank you very much, the three panelists, for the sharing your views. May I now go back to, before I get to, there are some questions that have come on the chat box. So before I get to that, Nihal, can I ask you to on your camera and also mic, and whether you can answer some of these questions. I know you're not the policymaker, that we are aware, whether you can come and at least give some clarification to some of the questions raised. I can see from what all three panelists raised, the issue is on dividends. I can see where they are saying that the advertisement is different to the law, and the dividends have already been declared. So they are raising issues with regard to last year, as well as going for some practical issues that Dilani raised. Anyway, you think you can shed some light on your thoughts are going to take this forward, Nihal?
Yes, actually, I also in a view that retrospectively implemented provisions are not very suitable, but discussing those aspects, the remedy has been provided through this amendment. So if any person has to pay any amount due to this retrospectively implemented provisions, you can pay that amount before the date of 30th June 2021 without any interest, penalty, or any penal provision. So there's no implementation of penal provisions against such persons. So you are having time to make the payment, and it should be made as final payment. I mean, the payment due on 30th September 2019. So you should use that code and make the relevant payment. So the department has already informed the same in our web notice issued recently. There it says if any employee who has not complied according to the law, that is also retrospectively amended provision. So in order to facilitate them, that remedy has been provided through this amendment. So you can get that, and this interest one is still available until going to be closed in a future amendment. So penalty and criminal provisions only the date has been given. So if any case, if you have to pay any dividend tax or any other tax, you are still having time to comply according to the law. That is the remedy provided. And as far as dividend is concerned, there are so many problems. Actually, after the introduction, after the notice issued by the Commissioner General on April, there are so many issues came to the department as well. So the same position available in the act is the way that we have explained to them. So there are people who have complied for them, though. Therefore, we have to balance the people who have complied according to the law and who has not complied. So it's very difficult to answer. So we'll look into that matter future. Yes.
I think the issue is more than the date of payment and the interest of penalty. Nihal,
Yes.
I think if I understand, some of the people are raising is when they declare the dividend, they didn't deduct in expenses or in tax. They declare the whole thing as dividend. But now
Yes.
it's declared. So if the formula is applied, then the amount that you can declare is less. So what happens to the difference? Like that, the question that has been raised. I know you can't get an answer to that offhand here because it's a department may have to come to a practical solution, in my view, because the companies have already declared it. There was no formula last year. That's the question they're raising. So they don't have enough profits probably to declare now. So maybe those are things that are practically problems that you may have to face. It's a 1 year issue. Last year's issue.
Yes, relevant taxpayers can communicate to us, so we can look into the matter and answer for them.
I think so. So I hope both Dilani and Amal, I answered your question. And Nihal has answered your question. I gave some clarity to it. Nihal, there's a question that has come from a couple of people with regard to these repairs, and I'm getting a bit of details now. Repair and expenditure side. Now people are saying that now the law says the repair expenditure can be claimed in full. So the question is, even if it is capital expenditure, of course there is always a difference between improvement and repair. So so if it's a capital expenditure or repair, can that be claimed in full?
Yes.
As improvement. What is the difference between improvement and capital expenditure repairs? That's
yes.
Question there.
Yes. In amendment, we have not amended the subsection 1 of section 14 to allow repair expenditure, whether the repair expenditure is in capital nature or revenue nature. So according to the Act, now if the expenditure is in capital or revenue, it's not subject to section 11, it's subject to section 14. So through the first subsection, you are entitled to claim repair expenditure, whether the expenditure in capital or revenue. As far as improvement are concerned, so as I said, it's very difficult to segregate this amount is repair, this amount is improvement. So it should be understand that the useful life of the relevant asset should be improved. And as I explained, you can use the accounting basis. Say according to the accounting basis, also you have to capitalize relevant improvement if the useful lifetime is increasing. So same type of basis you can apply in order to facilitate them that it was specifically excluded some items covered under repair. Otherwise, the officers will disallow certain repair expenditure, saying through this expenditure your assets, the asset will be improved likewise. So according to my understanding, now this restriction is applicable only for certain type of assets like building, machineries and vehicles, not for other type of assets. So if there's any unclarity regarding that, we can explain it through a public ruling or as a clarification to the relevant taxpayers' request.
Thank you, Nihal. There's another question that has come. I'm not taking all the questions. I'm taking as much as possible, but the more broader questions on the banking industry. There's a reference to the claiming of the bad debt provision. What is the reason for that change, and what are the requirements for a specific provision claim is a question that has been asked.
So I didn't get it. You refer about the definition or what is
the definition of specific provision? They're asking, yes.
There are certain instructions issued by the Central Bank of Sri Lanka, and according to the main act, there's no clarification with because it says directives issued by the Central Bank of Sri Lanka. So in that case, it's very difficult to find what is the applicable directive for this one, because according to the changes in SLFRS 9, the central bank has issued a circular stating this way you have to adapt your financial statement. I mean that circular is applicable only for the financial statement that they are publishing, not for their regulatory requirements. So the purpose of this definition is to the definition is only to exclude that type of adaptation related guideline, but not the other. See, if the central bank is going to implement SLFRS provisions even for their regulatory requirement, the definition says in order to make provision, not for only excluding the adaptation. So if the SLFRS 9 is the provision, is the guideline applicable to make provision, you are entitled to claim that provisions in a future date once they change their directives.
Okay, thank you. Then Nihal, there are questions that have come with regard to regulations, because now there are three important areas which require regulations to be drafted up by the Commissioner General in order to claim exemptions or to claim the deduction. One area is the deduction. Ms. Sarath Ekanayaka, do you mind setting off your camera, please? Ms. Sarath Ekanayaka, can you switch off your camera, please? Yeah. So there are exemptions. So the one is the deductibility of expenses on
Marketing,
advertising. What kind of gazette notification be published and when it will be published. The second one is with regard to IT-related services. Because a lot of people are asking this question on what is IT-related services that are getting exempted. Any views you can express on those, and also on construction services tax at 14%, all those require gazette notifications. So any indication or guideline you can give as to when this will be out and when people can claim this, and any kind of guideline you can give?
Yes, for construction services, there's no gazette notification required, because as I explained, it's general definition is applicable, and even the government is also in an intention to give that concessionary rate not only to construct building and using the previous the definition available in the previous act. It's the government is in intention to give that concession even for some repair related construction contract as well. So according to the general definition, you can claim it. As far as IT and enabling services are concerned, now it's drafting and should be discussed at the policy level. Anyway, it will be published before this month, as I said, in order to comply for the retrospectively implemented law. The time has been given. Therefore, definitely content of the gazette or the relevant gazette should be issued before the end of this month. And MARCOM expenditure related, the mode of calculation for local value addition should be given by the Commissioner General, with including some document maintenance requirements. So that is also drafted and discussing at this time. So it will also be published. I think within this month we can finalize and publish it.
All right, thank you. May I bring Shamila into the discussion? Nihal, you also stay in the discussion. Shamila, I'm going to bring you into the discussion. Just to ask, this area on agriculture, I mean, we have to applaud the government for exempting agriculture and giving a concessionary rate of 14% for agro-processing. But the debate will always be there as to what is processing, what is manufacture, what is the line that you draw. For example, if you tea, for example, in plantation company, does it change the character and contour of the leaf into a different? So is it entitled to 14% rate or is it 24%? For example, if you take chili, dry chili, is it 14% or exempt? If you powder it, is it 24%? I mean, those issues, I'm sure a law can't address every single situation. The law is already drafted as much as possible to cover and given as a relief. So as taxpayers, we also should not abuse it, is my view. But Shamila, any views you want to express on that, in terms of a bit more specific, the law, anything that you want to contribute? Ask Nihal on that matter.
Yeah, just one observation. If you look at the definition of processing, agro-processing, and manufacture, my personal view is that there is overlap. Processing can cover certain forms of manufacture because you have used an inclusive definition. So I think it might be good if you can, I know the next amendment is in the budget, but if there is a guideline issued like, simple thing, rubber into latex. So yes, it is not the milk, but it is in a more solidified form. But I don't think the intent is to cover that as manufacture, though you call it by a different name, etc. So there are endless situations like that. So it might be good if, there is some type of a guideline issued because there is an overlap between the processing, because the word processing is a very broad term. And then you have the definition to manufacture, which gives you in that first section 3 instances. So I think the intent is if there is not too much of a process to cover it within process, but if there is a total change in the form, and then to cover it in manufacture. So for the IRD to at least issue a guideline clarifying its thinking of the situation, and then of course later to clarify through the law.
Yeah, thank you, Shamila. Dilani, you represent the plantation sector. Any issues that you want to address for the benefit of the audience? I mean, we might have to find a solution here, but for the benefit of the audience, do you want to highlight any issues that you?
Yes, Dhuminder, I think Shamila raised a few pertinent issues, and this processing, the definition includes dehydration, and what is dehydration and what is manufacturing is a question that needs to be actually asked. And when you have complexities of this nature in an act, we need to be mindful that it will depend on each of the assessors at the Department of Inland Revenue who could interpret it in different ways, and most of it would end up with litigation. So I think the way forward might be to give a public ruling on what exactly they mean so that it clarifies, because if you're even a regional plantation company, there is this ambiguity because it's not only one product, it's not only tea, they have so many other products, and this ambiguity of, okay, how do you apportion your expenses between agriculture and processing is also a question. And I think the ideal scenario would have been if you look in Sri Lanka, most of the regional plantation companies are making losses. Given that situation, okay, wouldn't it have been convenient and more straightforward if agriculture was totally exempt? Manufacturing can be looked at in a different light, but this splitting here's what is agriculture and what is processing, and then you bring in another ambiguity of what is manufacture, is going to cause a lot of confusion. And I think this is something that needs to be looked at in the budget. And hopefully the necessary clarifications would come, because actually we have already filed 2 tax returns. That is, this was a retrospective implemented effective from 1st April 2019. So we have filed in the 2019-20 return. And then we have completed 2020-21 financial statements as well. And the return is due in November. So I don't think there would be any amendments before November 2021. And most companies have filed based on the press notice. So in certain cases, by looking at the interpretation, we might need to amend returns. And if you have, that is also going to cause a lot of problems for corporates. The fact that we have filed returns, then you need to go find a mechanism where you can amend, is also something that I think Mr. Wijewardena would need to take up with the authorities, because I totally understand he cannot give the answers to what we are raising because he is not the policymaker. But I suppose this is a forum which he can take up the points that come up at this meeting. He can take it up and give solutions either through directives, until the next amendment comes in.
Thank you, Dilani. Nihal, if I turn to you on one issue that Amal, I'll come to you before that. Nihal, one issue that a lot of people are already questioning is on these separate financial statements. To what extent should they be separate? Now, you might find companies that are having one product is exported, another product is locally sold, one is manufactured. Then, they can have 14, 18, and 24% is the same company have for different products, depending on whether they export it locally, buy and sell, or manufacture. So when you say separate financial statements, to what extent do you expect them to be separate? That is, and generally what companies would do is to apportion based on turnover. So will that be acceptable, and should that be audited separately, or will that be just management accounts that people even will be accepting it? Or can they separate the profits on a bottom line without separating the expenses? Can they go to the bottom line profit and apportion based on turnover? Or some other method can be given? What do you think will be the more practical one, because more accountants are here to be faced by them?
Yes, according to the provisions in section 120, there are so much of requirements should be requirements are there in Act. So there it says these type of documents you have to maintain, these type of accounts you have to maintain likewise. But from here, it's expecting only the separate calculation. Actually, in the intentionally, it's expecting only the separate calculation as banks and financial sector did when they are having leasing or leasing businesses. So they have provided separate income statement by proving the leasing profit or loss in order to as available in 2006 Act. So the basic intention was that, but anyway, there are so many concerns regarding this as well. That is why it was implemented with effect from year of assessment 21-22. Because this one is available only for financial statements. So you don't want to worry about the books of ledgers and other things. So at the final stage, after you prepared your financial statement, you can separately calculate what is the relevant gains and profit for each industry. I mean, say if you are having 14% taxable gains, so you have to prepare it. At the same time, if you are having 24% taxable gains and profit. So likewise, it's not expecting a complicated financial statement, and it should not be an audited one, because there's no point of expecting audited financial statement. So it's expecting a simple calculation anyway, as you said. So all the concerns should be obtained before giving a written instruction for the sectors, because there are people who have involved in tea industry and some people involved in rubber likewise. So there are different concerns. So as department, we have to look into each and every people's aspect, and then we can provide a confirmation. In this way, you have to prepare it.
Yes, I think you might need some kind of direction on that, because once the auditors start their audits, they'll ask for all information. So there's some practical problems that taxpayers might come across. So that is something that's come. So ladies and gentlemen, we are almost, running. We have 10 minutes short the scheduled time. Since there are some technical interruptions, I took the meeting beyond the closing time. Amal, if I invite you, I'll take 5 more minutes only on this session. Amal, if I invite you to share your thoughts on some of the industry you're representing, are there any issues that you think you want to share with the audience and with Nihal to take back from this meeting?
If you don't mind, answer for the Mr. Amal's question that raised by him regarding SME write-off.
Yes, please.
Yes, it's not an amnesty. As a COVID relief, through this amendment, it was allowed to write off certain income tax assessment to the Commissioner General. So Mr. Amal's question is whether the taxpayer is required to provide a request from the Commissioner General or not. So as far as that provision is concerned, now the department is preparing internal circular in this way that they have to, the department has to administrate likewise. So the department will find who are the SME and what are the assessment that the department can write off, because it says the Commissioner General shall write off. So in any case, if the SME is having on return tax, you can make that payment immediately, because from that tax, those assessment as well, the department can write off the penalty. So in order to get that benefit, the relevant SME can write off relevant SME can pay the relevant on return tax. And after consider relevant assessment to write off, the department will inform to the taxpayer this assessment has been written off, and if there's any refunds set off against the due assessment, definitely before setting off, the department will inform to the taxpayer. So likewise, it will be operated through this amendment.
Thank you for that clarification.
Can you ask any questions if you have?
Yes. Mr. Jor asked that Dilani said, I think now with the COVID situation and lockdown, we can understand, and through the amendment, we can't bring all the clarities. So the specific areas like this agro processing and manufacturing. So I think the best thing is actually department can issue a public ruling, then it will make clarity for the taxpayer as well as inland revenue itself. So it actually give a lot of good grounds to go and settle law to do a proper tax compliance for the taxpayer as well. I think that as a taxpayers, we would like the department look at that aspect to give kind of a lot of clarities to public rulings.
Yes. So yes, so ladies and gentlemen, I know there are a lot of questions that came. We cannot take all of them because we have limited time, and also some of the questions are very, very specific to a situation. So we have covered the general question much as possible. So whatever issues that you may have subsequently, you can always talk Nihal, is very helpful person, and clarify the issues. So I really want to thank Nihal and for the time he has spent. Nihal, thank you very much. I know you're working from Candy and you're obliged to slide and come to us and present this. So on behalf of Ceylon Chamber, I want to thank you for that excellent presentation you did. Also, as usual, to Shamila, who's on the taxation committee, and for sharing her thoughts with us, and the two panelists, Bodilani and Amal. So before I conclude, I want to hand it over to the organizers. And on behalf of Ceylon Chamber, I want to thank all of you for participating. And I hope it was useful and fruitful session. And that we'll come back to with another session, maybe in a very short period of time. And until then, may I hand it over to the organizers to do the concluding remarks. Over to you, Jillian. You're on mute, Ms. Ansela. Yeah. You're on mute.
Yeah. On behalf of the Ceylon Chamber of Commerce, I thank the panel and the moderator for their contribution towards the success of this session. If you have any further questions, please forward them to events@chamber.lk and we will get back to you as soon as possible. Thank you, everyone. Good day.